Hey everyone, welcome back to my channel. Things have not been great as far as the stock market is concerned, and I'm definitely feeling the pain. It feels like there's no end to this carnage that we are seeing in the stock market. I just went and got a buzz cut, and I thought that'll be one less thing to worry about. But you know what? Jokes aside, I'd like to thank many of you that have come onto my channel and viewed what I had to say. I've been able to gain 3 new subscribers since I started putting my investment journey on my channel. So I'm really, really grateful and thankful for it. I didn't expect it. And I'm again thankful to anyone who's coming out here and listening to what I have to say. I am on the journey of actually, documenting my investments and how I grow my wealth. And if I get to my $1 million goal through my investments or not. So far, things were going very well, and I have kind of hit a roadblock as far as the stock market is concerned. Things have actually gone south as opposed to north. But you know what? I'm going to continue and I'm going to do the experimentation that I'm doing. And I'm also going to do the trial and error, see what I learn from it, and maybe able to impart some wisdom. Although I'm not a financial advisor, and if you want financial advice, I think you should go and talk to a professional, and I'm not that. I would say that through this channel, I also want to get in touch with people who are on this path to financial freedom, who also understand the value of saving and investing so that I can learn from them and maybe even impart some of my wisdom to them. Anyway, having said that, I'm going to share with you my portfolio from last week, as of last week Friday, and things, as I said, have not been that great. So first, let me just walk you through my portfolio. Then I'm going to walk you through where I think this is all going to be, bottoming out, and where we, can expect the market to sort of rally up again, and some of the things that are playing out. So as you can see, over the last week, I lost $14,495.48. That was a big, big, big hit. I don't think I've lost this much ever since I've started investing, even at a percentage, 6% last week. If I look at it from a month perspective, because everything started to go south beginning of January, I've lost about $20,000 and $20,798. So that's been a tough going. Every one of my stock has been absolutely hammered. Tesla has been hammered. Obviously, we have earnings coming up for Tesla, so I'm sort of waiting and watching as to what might be in store for Tesla. We know that the top line might not be a problem because the deliveries numbers just blew out every estimate out there, from a top line perspective. And I'm expecting Tesla to actually crush the bottom line numbers as well. However, the macro environment seemed to, overshadow everything. And I think that's going to be interesting to watch how Tesla performs as far as the stock is concerned after hours on Wednesday when they announce their earnings. If they're absolutely stellar, I am looking forward to see if Tesla rallies despite all the macro conditions that we are facing right now. So it's going to be an interesting watch. Microsoft has been down. It's actually below $300. Apple has not lost as much. $161 is still higher than when I sort of, got back into the stock. Adobe has gotten absolutely hammered. Below $500, this stock almost touched $700. So you can see how badly it has been hit. VOO is down to 401.50. My analysis that I'm going to be talking about in a short while is based on where the S&P 500 might actually bottom out at. And I'm going to hold myself accountable. I'm going to see if what I say actually holds water or not. And that's going to be the, the part and parcel of learning as I go on this journey. Lululemon has given up all its gains since I invested in it back in 2019. Home Depot has also, shed a lot of its gains. It was up in 400s. Now it's back to 349. Goldman Sachs, 343. What an environment this is. Rates are going up, but you know what? Even the banks are not able to hold water. Even the banks are shedding, their gains. Now, one thing I would tell you, banks' earnings came out, and one of the things that came up was that they actually compensated their bankers quite well. That, was a burden on their income statement, and that also took away from the forecast in the future. So a lot of things going on. I hear about different variables every single day. I'm just absorbing all of that in. And I think as I become a long-term investor, these anecdotes are going to come in handy when a situation like this comes up in the future. Target is down to 217. AbbVie, one of my favorite stocks, is $131. I think the 52-week high was 137, and it's now gone down to 131. Lucid Motors, obviously, I really expected this stock to be hammered more than what it is, but it's at 37.76. Nvidia has absolutely, lost all the gains that it was able to muster up. Honestly, I feel like any stock that Jim Cramer goes and says, I love that stock and this company is going to be a $10 trillion company and such, at least seems to fall in the short run. I have high hopes of Nvidia in the long run, but you know what? Who knows? Pepsi was one stock that was up for me on Friday, which was, good to see some green. Has been a while. But you know what? Pepsi was up for me. Disney's down. There was, obviously Omicron and COVID has a lot to do with where Disney is today, but it also is a reflection of the Netflix earnings that came out last week. Absolutely hammered. The stock was absolutely hammered. And I think because Disney has a large stake in these video streaming services, it reflects on the stock as well. It was down 6.72% on Friday. AMD, I think it goes hand in hand with Nvidia, was down 3%. Bank of America, as I said, one of my favorite stocks as well, was down 2%. Costco down almost flat, 0.25. But then if you look at its 52-week high, it was well into the 500s, and now it's at 481. Casey's General Stores, it's a convenience store company, was down to 181. Google is now below my average cost. And anytime a company goes below my average cost, and if it's a good company, it makes me feel comfortable buying it because then I can dollar cost average it. Not the most ideal situation, but the way I think about it is if I bought Google at a higher price, and if now the price has fallen, I should be able to buy it, especially if it's fallen below my average cost. Shopify got really hit. I think it was it's down 50% from a 52-week high. I have a chart later on. I'll show you where these stocks are compared to the 52-week high. We'll give you some context. Neo has been getting hammered. I expected that, just like Lucid. I expected this. Realty Income, again, one of the green stocks for me on Friday, but it has come down from its level of $71, $72 to 67. Again, this one is a dividend play. It gives me $25 per month. I have 100 odd shares for this company, and I'll continue to hold it. If it goes below my average cost, which is I think $66, I'll add more to my position. Coca-Cola, I'm so glad I bought the stock. When I was buying it, a lot of people were asking me why you're buying the stock. But you know what? It's holding some water and it's helping my overall portfolio right now. I bought 43 stocks in the company, pays decent dividend, and is holding on in these times. Johnson & Johnson was down. Morgan Stanley, again, one of my favorite banks, was down. Next Era Energy has been doing okay, but again, did not last on Friday as far as the market conditions are concerned. Asana is very much a speculative play. I think it's a great company. It has some great services. As a matter of fact, some of the insiders, bought some of the shares as they came down. So it gives me some confidence in terms of the direction. This stock was once $140. And when I say once, I'm not talking 3 years ago. I'm talking 2 months ago, $140 to 49.82. That's how crazy things have been. CRM, Salesforce has been down. I don't have a lot of stake in this company, but I think I'm watching it. Pfizer again, the cost is now above the share price, so I might add to some position there. TELUS has been holding on okay. It's a small little Canadian company, telecom company nobody really cares about, but I think I will start to care about it because I think the stock holds relatively okay because the market is pretty stable. Small market, small Canadian market, but it's pretty stable. HC again, I don't necessarily, I'm not a big fan of the company. It's gotten hammered really, really hard. 750, minus 750 on Friday. So again, I just have it here. I'm just watching it. I just have 0.1 stocks. Ford has been hard hit. I'm really interested to see how this company is going to be in the future, because you know what, at the end of the day, Ford is running on ICs. And I know they have some electric vehicles that have created some buzz in the market. But at the end of the day, how do you sort of, shed your, bread and butter and become a totally different company? So it'll be interesting to watch. Anyways, the market has not shown any love to Ford, although it rallied quite a bit. I think a week ago or so, it's come down to its normal levels. I would say I think it's still very high, to be honest with you. I think the PE at this level, I think it's 2029. I might be mistaken, but I think it's still pretty high. Estee Lauder is down. General Motors, again, I just have it here just to know where the stock is trending. 0.04 stocks, so it's not a big deal. BMY or Bristol Myers has been helping my portfolio. It's actually above my average cost. Facebook is a conundrum. I think this is a great tech company, makes a lot of money, makes a lot of free cash flow. Looking at metaverse, things are looking up. Obviously, it has had some scandals as far as the whistleblowers are concerned. I want to add to it. I want to get 25 shares of Facebook. It's much below what I bought the initial 11.67 shares at. So I'll definitely add to the position. But you know what? This market seems to be sparing nobody. Starting putting some money, some dividend money into oil companies, which is why I have CVX, Rivian. Again, I don't know why I have it, but I have it. 1.31 shares. Totally been brought down to earth. A lot of things came up. Ford, I think, is selling it off. And here we are, and I'm glad that it's at this level, because it didn't deserve to be 170 or whatever it reached. Store Capital, I have one share, doesn't matter. And then Dow Jones Industrial Average. So you can see that every one of my stock, barring two, were down and down quite a bit. And that's reflected in the minus $20,798. But you know what? I am going to be patient with this market. I have seen the highs. Now, when the lows have come, I cannot abandon it. I may look to see if I can take some profits from Tesla, just in case, but I will watch how the earnings come in. Two things to watch out for. The next week is the earnings season is basically practically kicking off. So you have earnings of Microsoft, Apple, J&J, and Tesla, as far as my portfolio is concerned. And I think those companies are going to set the tone. If they're anything like Netflix, then you know what? May God help us. But either ways, that's going to be one catalyst. I really hope that the earnings are good. The second piece of very important information comes out is the Fed meeting on Wednesday. If the Fed can come out and say, look, we're going to raise the rates, and the rates are going to be X, Y, and Z, and going to be at X, Y, and Z time, you know what? the markets, I believe, will rally, because right now there's a lot of uncertainty in the markets. We need certainty, and I hope the Fed gives us that. You know, what is the stock price? Stock price is the present value of the future cash flows. And what do you discount those future cash flows by? Interest rates. So if I think the interest rates are going to be higher than what you think, obviously my valuation is going to be lower. And that's what's happening. The markets are trying to figure out what's the worst case scenario, and they're trying to actually put this into these valuations. And therefore you see the panic in the market. So those two things, earnings as well as the Fed meetings, are absolutely important. Nothing else as far as a catalyst is concerned is, is going to come up. But those two are very big catalysts. I really hope Tesla blows it out of the water as far as the bottom line is concerned. I think they will. I've read some good reports on how they've been able to maintain some crazy margins, whereas their peers absolutely have not been able to. So I think that will be great. I'm hoping Microsoft does well. I have 100 shares of Microsoft that better do well. Apple does well. Again, we had a lot of noise about how they won't be able to fulfill the iPhone deliveries because of supply chain constraints and so on and so forth. So it's going to be interesting. But at the same time, if we can get some certainty in the market, I think we will have a bottom sooner than many people think. But if we don't have any certainty, if it still comes out as like, a wishy-washy kind of like we are going to raise interest rates and stuff, it's not going to help the case. In fact, markets could actually go down further. I have mentioned this in, I think a couple of my videos before. This is not over. And I'm telling you, this is not over. This is still not over. If you are a first-time investor looking to invest in the market, if I was in your shoes, I would hold off a little bit and see how things are progressing. If you've already invested in it, just be patient. This is the part and parcel of the game. When COVID drop had come in, I was really, really scared, but things worked out. So again, I'm not a financial advisor. All I'm saying is I feel that as a common investor, that if you stay patient with the markets, if you stay invested in the markets will reward you in the long run. In the short run, they're always going to be, these fluctuations and such, and we are going through one now. This should have come earlier, but you know what? It's coming now. That's fine. Before we were talking about transitory inflation and all that kind of stuff, obviously it was not transitory. And now we need to take care of that inflation. That cannot be at 7%. That is absolutely crazy. Anyways, that's where my portfolio is today. I have gone from a highs of $261,000 at the height of my portfolio to $221,000. Almost lost $40,000. That's 15% of the value has been eroded. Absolutely gone. Which is fine. You know what? I really think to make up $40,000, I have enough years, and I will stay patient through this. Anyways, I try to understand where this might all end. So what I did was I went in and I looked at the 2000 crash, and I said, what was the 2000 crash or the dot-com bubble, and are there any similarities to what we are seeing today? So I went into handy dandy Google and basically just typed in how much did S&P crash during the 2000. And guess what? The first excerpt comes out. It says, in 2000, stock market experienced a bubble. We are experiencing a bubble. This time period was marked by overvaluations, excess public enthusiasm for stocks, and speculation in technology sector. Is this current period marked by overvaluation? Absolutely. Did the public have excess enthusiasm for stocks? Yeah. Look at AMC, look at GameStop, look at the retail investors that have poured in. Much more enthusiasm this time around than that time. Speculation in technology sector. Were people talking about, the technology stocks going really up? Absolutely. So does it look like a 2022 scenario? Yes. So can it give us some indication of where the stock market end? Probably that's one data point, and that's what I've used in my assumptions. So it says when the bubble burst between 2000 and 2002, the technology-centric Nasdaq fell nearly 63%, while the S&P 500 fell almost 25%. What does that mean? What it means is that, if the situation now is similar to situation then, I can expect my S&P 500 to fall 25% before any sort of upward movement is expected. Now, again, if Fed can give us some certainty, that may all go away and we might all be smiling next week. But if nothing like that happens, I expect the S&P 500 to drop 25% or so before it rallies up. Now, is 2022 as bad as 2000? I don't think so. Because in 2000, you had these bogus companies that had gone public and were not making any money in the technology sector. They were not necessarily technology companies. They were just called technology companies. Pets.com comes to mind. They had no idea how to make money, but everybody was bullish about their valuations. Same thing today, but we have companies that are actually proving very, very profitable. If you look at the FANG stocks, look at Meta, for example, I was talking about, look at their free cash flow, billions of dollars of free cash flow. Look at the PE ratio of Meta. It's 23, 24. That's not a high valuation. That's pretty decent valuation. It may be actually lower than that. So what I'm saying to you is the scenario in 2000 was much more crazy than scenario today. One could argue that the inflation in 2000 was much lower than inflation today. But at the same time, the valuations in 2000 was much more crazier than what the valuations are today. So I feel the 20 to 25% scenario of S&P going down from its highs might actually be a pretty fair scenario. We'll find out soon. If it keeps on going down and down and down, even after the S&P falls 25%, obviously I was wrong, but you know what? I tried. So let's look at what I'm trying to say. So what I've done is I've created this spreadsheet, which has all my stocks, all 40 of them. And I have gone and painstakingly, manually updated what the 52-week high for the stocks was. For example, Tesla was at $1,243.49, at its peak in the last 52 weeks. The current price is $936, and it has fallen 25% off of that 52-week high. Look at Apple, minus 12%, not bad. Apple has had some good sort of, rallying despite the macro environment. Adobe, one of my favorite companies, down 29% from its 52-week high. Microsoft, down 15%. VOO, which is also the S&P 500, or the ETF that represents S&P 500, is minus 9%. I expect this to go down to 25% before the markets are going to rally. And why am I saying that? I am saying that because the environment today is very similar to what it was in 2000. You can say the inflation is bad today. Inflation was not as bad at that time, but the valuations were crazier that time than the valuations are today. So that's one thing. So if once this number becomes minus 25 or minus 20 to minus 25, I think that's a good time to start getting into the market around that time. I also think that it's going to continue to fall till it becomes minus 25. We'll find out next week. Again, Fed can change it all. Again, Home Depot is minus 17, Goldman Sachs minus 19, Lululemon minus 36, Target minus 19, AbbVie minus 5, and so on and so forth. Two things. One is it shows the power of just investing in VOO in a long period of time and forgetting about the rest. Because if you had invested in just the VOO, you wouldn't have to deal with some of these crazy technology drops that you're seeing out here, you would have been, not as bad. But either ways, I don't think there are many people who just go after VO. Everybody wants to sort of, own these different securities, as did I, when you hear them from your friends. So again, Lucid, Nvidia is down 33% from a 52-week high. Disney is down 32, AMD is down 28, and so on and so forth. Look at Shopify, minus 50% down from its 52-week high. NEO is down 58% from a 52-week high. So anyways, as I mentioned, Asana is a company I do want to own from a speculative purposes. I'll keep it. I might increase my position there. It's become pretty cheap, trading at below 50 right now. It's cheap relative to where it was, not cheap relative to its fundamentals. Just wanted to make that clear. You have Salesforce pretty bad, Etsy hit pretty bad. Not a big fan of the company. Rivian is down 64, and so on and so forth. So you can see that 12 of my companies that I own are worse than 25%, 11 are better than 10%, and then 17 are between 10 and 25. So that's where the portfolio kind of shakes out. I still have a pretty decent gain, of $80-something thousand, which is pretty surprising given the scenarios that we've seen over the last few days. But what I did here was I said, is there a way I can go in and try to find the bottom of each of the stocks that I own, given the fact that I expect S&P 500 to fall from minus 9% to minus 25%. All I did was I created a ratio of minus 25% to minus 9%. And I said that, and I just did unitary math, that if a minus 9% S&P akin to a minus 25% in Tesla, what would a minus 25% in S&P akin to as far as Tesla is concerned? And that number comes out to be minus 69%. If I think S&P is going to fall down to 25%. Now, one thing I'll tell you, this is just taking the macro environment. This is not taking into account any good news that comes out of the company or any bad news that comes out of the company. None of that I've taken into account. All I've said is, I know my S&P fell minus 9% from a 52-week high. Tesla fell minus 25% from a 52-week high. If I create a ratio of these two, minus 25 and minus 9, and then I say, what if S&P 500 falls down to minus 25? What does that look like? So that gives me a minus 69% off the 52-week high for Tesla. That means if this were to come true, Tesla's share price could fall down to $390.35. That's my absolute bottom, I think, where Tesla is going to end at before it starts to rally back up. And, Apple will be at 123.79. Adobe, because Adobe is already down 29%, according to this math, it gets hit even harder. Because if you have, really deviated away from the S&P 500, that means you're going to fall even more when S&P 500 falls more. So that's how I have done this math. I think it is a way to give me some confidence of where my stocks could end up, the absolute bottom of these stocks. Is this going to happen? Probably not. There's a lot to see about how the company is doing. Maybe the company will have some good news that comes out of it. Tesla has earnings coming up. A lot of good news can come out of it, but it all depends. I really think that, if Fed doesn't intervene or nothing happens, the market is going to continue to fall down to minus 25. I think maybe minus 20. And that's why I have the second scenario of minus 20. Why minus 20? Because I feel that we are not as bad as the 2000s. I really feel that we are not as bad as the 2000s. So when you look at, a 20% fall in S&P 500, Tesla is expected to fall to 560.98. I am more willing to believe these numbers than I'm willing to believe the 390.35. Although if S&P 500 falls to minus 25, then you can see that Tesla might also be coming down to a pretty big number. What does it all mean for my portfolio? It means that my portfolio is going to end at $130,000 if I am, if S&P falls to minus 25% from its 52-week high. If it falls to minus 20% from its 52-week high, I will be at $158,000. So this at least gives me some comfort. It allows me to sleep a little bit better at night. That I know that at the end of the day, this is kind of like the sensitivity analysis of where my portfolio could end if this keeps on going down. When do we expect us to get there? I believe in March. I was just tracking how sort of S&P has been trending down, and it will probably take up until mid-March or end of March for it to hit that minus 25, and from there on it could rally up. That's just my speculation based on some of the assumptions that I've made, based on how 2000 stock crash sort of performed. I do not know what will that look like, but I think I'm very comfortable with these numbers, 130 and 158 to 39. What I've also done is based on my math, some of these stocks, like for example, Shopify, which are down 50% from its 52-week high, actually going to minus 140. Obviously, we know that a stock cannot go below zero. If it goes to zero, then the company ceases to exist. And I don't think that's going to happen. So for those scenarios, what I've done is I've said, to be conservative, I'm going to say wherever the stock price today is, a 50% of that number, 50% of wherever the stock price currently stands. So for example, Adobe stands at 874. I'm saying that Shopify stands at 874. I'm saying that it could fall to 437 before it rallies up, because there were a few stocks that things didn't work out for. For example, Asana. I think Asana could be well in 20s at some point in time. Etsy, for example, or Rivian, might fall down to $32. In both scenarios, I have them at the same place, but these are the ones that are like the high flyers, kind of hit hard stocks, which I think have some ways to go before they actually bottom out. What I'm doing is I'm kind of drawing a line here in the sand, and I'm saying, I am going to revisit this video later on when things have sort of calmed down and see, did we even get here? What things changed? What things changed from this sort of assumption analysis to when the reality comes in? It may not even come in at this, but I think it gives me some comfort level as to where this might end. As I've said, I was at $261,000. I'm at $221,000 now. I've dropped 15%, $40,000 in the market, and still keeping faith. For all of you who are new investors and are looking to build wealth in the long run, let's just keep faith. Although I'm after the earnings, Tesla earnings, I might be looking at taking some profits from Tesla, but I also think that if I do not sell Tesla and it gets to 390 or 560, I might buy it a little bit more, because at that time, this is the absolute bottom. From this, it's only going to rally. So this is where I am. This is my analysis. Some of these stocks have been really hard hit. Salesforce is down 30% from its peak, 52-week high. Rivian is down 64. I've mentioned that. So this is where I'm drawing the line. My portfolio is going to be not lower than 130, 632. In my worst case scenario of S&P falling by 25% from its 52-week high, and a $158,239. If S&P falls 20%, I do not expect S&P to fall more than that. And what is that level? So if I look at it in terms of VOO, that level is $330.95 or $353.01. I think once VOO hits this level, I really hope it doesn't come down to that and markets start to rally before that. But if it comes down to this level, I think I'm going to start investing a little bit more aggressively than I am doing right now. As a matter of fact, I'm not even now going to put any dividend money in there when I feel that it's going to drop a little bit more. So 353 VOO 330.95. So I'm going to come back to this video. I really hope it doesn't come down to it, but it's going to be a good learning as to things that might happen. I really hope Fed comes in and says, this is what we're going to do, provide some clarity to the market, and then we rally from there. But know that some of the valuations are really crazy. Like, you cannot justify those valuations any which way. So market has to shed some weight. Either ways, this was my analysis. Hope you liked it. And I'm really excited to see where the bottom might come in. If it comes in around these, I'll be, happy and unhappy at the same time, because I would have gone down quite a bit if these two scenarios were to play out. If I was $130,000, I would be losing from where I am today $90,746. And if this scenario plays out, the 20% of the 52-week high for S&P, I would be $63,139 off, where I am today. The philosophy of holding the stock long term comes in the way of me selling some of this, but I might try it out this time if the market keeps falling. But anyways, this is where I am. Not been good days in the market, but let's hang tough. Let's try to create a community of people who can pep each other up during tough times and can celebrate when times are good. But I really think for a person like me, this is the best way to generate wealth, and it will have its ups and downs. But I'm hoping that the ups will be bigger than the downs, although you cannot avoid the downs. But anyways, thank you so much for listening. Actually, it is now 3 a.m. my time. I've been pretty busy with work, and I just found this time to sort of put this video together. Hope you like it. Again, not a financial advice, just me doing my scientific experiments out here and see what works and what sticks, and hopefully give you some sort of either motivation or knowledge as I learn new things in the market. Not a financial advice. If you want financial advice, definitely go and connect with a financial advisor. Thank you so much for listening. I will connect with you in my next video. Till then, happy investing.